And exhale. Turns out the world's second biggest economy isn't chugging along as slowly as feared. China turned in a second quarter growth rate of 7.6%, sluggish like it was in 2009, but leaving room for the country's policymakers to further juice up the economy if needed. Peter Cardillo of Rockwell Global Capital.
China is probably going to close the year with growth slightly above 8%. And that's good news because I think that saves the global economy from running into recession.
A bit of nail-biting also ended over JPMorgan. The country's largest bank turned in a $5 billion profit despite $4.4 billion in bad trades. CEO Jamie Dimon said the losses resulting from sour bets on corporate bonds could still grow by up to $1.7 billion. He also admitted that the bank's traders may have tried to hide the extent of the losses earlier this year. Still, JPMorgan shares soared in a relief rally. Despite some mixed economic data, markets overall embraced the day's not-so-bad news, snapping a 6-day losing streak. For the week, the Dow eked out a fractional gain while the Nasdaq lost ground. Turning to the LIBOR scandal, documents from the New York Federal Reserve Bank confirmed that it was alerted to possible manipulation of a key interest rate as far back as August of 2007. The London Interbank Offered Rate underpins trillions of dollars in loans and contracts globally. And the founder and CEO of a failed Iowa-based brokerage firm, PFGBest, was arrested for lying to regulators. After a recent attempt to end his life, Russell Wassendorf Sr. admitted in a suicide note disclosed in court documents that he had embezzled millions and forged bank statements for nearly 2 decades. As for Europe, thanks to China's news, shares rose to their highest level in more than a week.